All right, all right, all right. It's my man, Kevin Thompson in the house. Welcome to the Life Money Balance podcast live, y'all. We about to get in it. All right, let's kick it off. Hold on. Yo, Kev. Oh man, that intro was live right there. I got that good music. I got that headbanger stuff right there.
I bet you do, my man. I appreciate the opportunity today. Thank you for having me on this Sunday. Let's get it, man.
Yeah, man. Let's get it, man. A lot of stuff happening out here. You know, we try to pick, social culture topics, what's going on in the market. Right, well, what's going on with our money, mind, and the figures of it. So we this is what we chop it up about, man. How's your week been?
Nothing's really happening this week. The markets have been kind of slow. I mean, there's no volatility. It's just very easy. No, I'm just kidding. Man, you know what's going on, man. A lot of rebalancing, a lot of very little conversations because we've done a very good job of educating our clients. So we may have an offshoot conversation here or there, and we're really good at getting out in front of this. Like we've sent out a lot of letters with letterheads saying, hey, this is what market volatility looks like. This is what we've trained for, and we're just doing what we're supposed to be doing as advisors.
Yeah. The conversations matter, right?
Yeah.
And a couple of topics we're going to talk about is the Trump economy, because it is here, and what's happening right now and what's going forward. So Trump economy and your money. We're going to talk about the earnings season because that's going to tell us a lot. Even there's some companies that's already adjusted their forecasts going forward, so we'll chop that up. And given that March and April is really fantastic for those that practice a particular faith. So I always say faith as you define it, because it's your own relationship, right? So it's kind of special with the Abrahamic religions. We have today is Passover. Last month was Ramadan, and then we got Easter coming up. So how does people's faith play into their money and how they what they value most? So we're talking about that, and then also too sports betting. Oh my goodness. Man, let's see. Robinhood just purchased Trade PMR, so getting into the wealth management business. So we're going to see how that affects financial behavior across generations, right? We got a lot to chat up about, man.
Let's do it, man. I'm here for it,
man. Let's talk about Trump, man. Yeah. Well, first of all, let's talk about President Trump. Let's get let's give him his due right off, and then we're going to call him Trump because he called himself Trump. Right. He calls himself in the third person. So what we doing? Right. So, we may mix it up with Mr. Trump or Trump, but hey, Trump calls himself Trump. Right?
Exactly.
Matter of fact, I think I walked outside, Kevin, today, and I just congratulated myself and started talking to myself in third person. So I walked outside and I said, I talked to my wife, Iman. I said, Iman, look, the sky is blue, clouds. And it's the best weather that we ever seen. So I brought in spring because, after winter, you need some sun. And we've never seen a spring like this before. So,
man, you're wild, man. I love it.
Oh man,
good impersonation. I love it.
Right. So, hey, what surprised you about, a lot of when we talk about uncertainty, folks are used to unexpected uncertainty, and even at that, Kevin, it doesn't feel well in the moment. So we talk about unexpected uncertainty. But what about, just unprompted uncertainty, right? Unwarranted uncertainty, just come out of nowhere. So when we talk about, is this different? Is it?
Well, what surprises me is that everybody's surprised, right? To be honest with you, everybody's surprised about something that they knew what was coming. If you read the documents, you read everything that they said they were going to do, they're doing exactly what they're going to do. They're wanting to flood the zone, and they're flooding the zone. Steve Bannon and all those guys flooding the zone with information, and trying to get you off of the path of what they're trying to accomplish. So to me, I'm not surprised by any of it. I'm not surprised about the volatility, but I'm gonna go a different direction.
Yeah,
So I wrote a Substack about this a couple of days ago. I said, what if Trump is 100% correct? What if he's 100% correct about reshoring the businesses, reshoring infrastructure, manufacturing, all the other stuff? and PP, because we saw what happened, right? PPE, the supply chains got disrupted during COVID. So we don't want to see that happen again. So how can we make sure that doesn't happen? Well, we got to start reshoring some chip manufacturers, reshoring some manufacturing capabilities, so that we're not exposed to that moving forward. So what if he's actually right? What if he's actually right in what he's trying to accomplish? And I started talking about, okay, reshoring, check. Bringing jobs back, check. Bringing the global economy back to and controlling it. Okay, check. But why won't it work? Ask yourself, why won't it work? And the reason why it won't work is because corporations, executives, businesses like ourselves, we don't believe in it. 2, consumers don't believe you. 3, the actual investors don't believe in you. So for something to take a 180-degree turn like it has and try to just change the whole manufacturing complex or the whole global complex as it stands, you need 100% buy-in. You can't have 50% buy-in. You can't have 75% buy-in. You have to have 100% buy-in of people like yourself, people like the executives out there on Wall Street, people like everyone for this to work. And he's not going to happen. It's not going to happen. So therefore, that's why I say, yeah, it could work. I can have the cure for cancer. But if no one believes me, it doesn't matter. So that's just my philosophy around that.
Yeah, no, the question has to be asked because here's the thing. We want to be objective as much as possible because there's, you got people on both sides of the aisle. That's fine. But I always say, Kevin, like politics themselves is the gamesmanship.
Yes.
It really panders to people, whether it's propaganda plays on emotion. There's a lot of misinformation out there and all that type of stuff in order to garner effect, right? Which gets to the policy. Policy affects pockets and it affects people, right? So when you get to the policy of it, when I say you, I'm talking about society is really no longer on a side of an aisle. You know, that's politics. And when you get to the policy now, oh man, now we're starting people losing jobs, because like Michael Jordan said too. He said Republicans buy Nikes too. Right. So that meaning that when yes, the government is being shook up and all this other stuff when I shook it up, I think disrupted.
Yeah. It's disruption. It's disruption. 100%.
It's disruption. It's not even unplanned. It's not even planned disruption. I mean, it was planned as far as the intent, but as far as how it's being handled, right? There's no really plan, right? But my point about it is whether you're on left or the right, if you lose your job, right? Now we're getting into policy and actually how your pockets feel. Right. So when we talk about the tariffs, although there was a walk back for 90 days, pause, right? But we still have the uncertainty there, and prices affect pockets all day long.
We got so much to talk about right now. So you just mentioned that. You mentioned there was a walk back, but why was there a pause? Oh, well, you know what? Jamie Dimon got on TV and he made me think that it's going to, no. It wasn't Jamie Dimon. It wasn't China. It was the bond market. The bond market went up 50 basis points in over a two-day period. And what is that? That's $150 billion in additional interest that they're going to owe on new issuances of debt. So when the CR comes out, the quote unquote, the budget resolution that just came out, they're wanting to sign, it has a $959 billion interest expense for 2025 and billion and $13 trillion over the next 10 years. So you're going to have to change all of that, right? If you're paying 4.5% to 5% interest on new issuance, your interest payments are going to go through the roof. So they don't want that bond market to go up, man. And that's what they're fighting against.
Well, yeah, you had particular countries offloading bonds, right? Off the hook. And it said, I think Rasheed Wallace said, time he used to a player for the dude for the Pistons, right? Yeah. And he's talking a lot of trash, right?
Oh, yeah.
And at the free throw line, people used to make them miss them free throws, and Rasheed was like, "Hey, man, look, ball don't lie." Right? And bonds don't lie either.
The bonds don't lie.
They're the most held asset on the world, on the planet. Yeah. Right. And the riskiness of the economy, particularly with the U.S. and global economics, is baked in to the interest bond rates. Right?
Oh my gosh. Yeah. It's baked in, and people don't realize that. Well, one thing I want to say is we all need to be careful because the bond market in itself, The Fed owns a lot of bonds, like $4 trillion. State and local governments own some bonds, so about $5.5, $6 trillion. And then, of course, you have your hedge funds, your investors, your mutual funds, and all the other stuff. The Chinas of the world, maybe 800 billion. Japan, another maybe 1 trillion. And were they offloading? They don't know yet, but the way the bond market was moving, it's a possibility. But at the end of the day, a lot of that payment that's going through, the Fed's just getting it back, right? Like we're paying ourselves. So in theory, 200 to 300 billion of that is coming back to us, but there's still $600 or $700 billion of that's going out into the ethos, quote unquote, that we have to pay, and that's less money going to what? Social programs, the defense, things like that, and our deficit continues to rise and rise and rise. So, saying all of that is that if you want to look at what's going on, look at the bond markets, and that's just my take on that.
Yeah. So before we pivot to the next section, what we're people's pockets, right? Yeah. So when we talk about COVID prices, COVID prices, when you talk about inflation was 20%. It was up there because supply chain disruption, all that, right? Mm-hmm. It's because of COVID and all the disruption that caused. Then we had a steady decline of inflation from 20%, and for the last couple of years, actually, year over year, it's been 2.5. Something to this effect, 2.3. Coming down, right? So that said, the prices, Kevin, were coming down from COVID highs. So we had a new normal of prices that people were finally starting to stomach, right? Mm-hmm. When you're talking about homeowners insurance, prices of cars, prices of homes, eggs. Yeah. Right? All of this, right?
Cluck.
Right. So now we have elevated prices that people have been getting used to. So now we have a normalized price acceptance. Mm-hmm. Then you come up with the tariffs. Yeah. Right. Savings rates are starting to decline again. Debt holdings, as far as consumer debt, is starting to rise again. People have gone through their COVID savings and now even their established savings. They're starting to run on that. Right. So now I'm talking about the pinch of the pocket. Yeah. All right. So that's when you start talking about consumer sentiment, which is all-time lows. You're talking about the Michigan index, and the VIX upwards to 40, right? As far as the worry index. Yeah. This is what we're talking about. Yeah.
That's exactly what we're talking about. And you mentioned two things. One thing we all have to worry about or get used to is the ratchet effect, right? The longer prices stay high, our company's going to say, hey, you know what? Inflation's come down, so we're going to bring those prices down. No, if prices stay high for a long period of time, they're just going to pocket that. They're just going to pocket the difference. Don't get it twisted. Companies want to make money. This is capitalism. So there are going to be some prices on commodity items that come down. But in the grand scheme of things, if prices stay longer or higher for longer, that ratchet effect, and then of course the wage cost spiral that comes into effect, it's all going to remain higher, and it is what it is. So you got to get used to those higher prices. But the main thing I want to say is you mentioned like for the consumer, what they're talking about, what the administration is talking about is this. They're saying a little pain, like Clubber Lang. Remember Clubber Lang? Pain, right? Yeah. But pain is not a paper loss for some people. Pain is, like you said, losing a job, not being able to feed your family, losing your house. That's pain. But for those guys up there, that administration, everybody's gonna go through a little pain. Yeah, that's fine. But America is not a business. America has 70% of its outlays going into non-profitable programs. So it's hard to sit here and say, yeah, you guys take some pain when there's somebody trying to get a prescription filled or somebody trying to get food on the table.
Or even Social Security, checks. They were. It was a little glitch in the system too for a second because of all the uncertainty and who's fired, who's not, right? All this other stuff. And to your point about the income challenged, right? Yeah. Obviously, it's going to affect them. But even higher income folks, there's 10% of the high income earners in this country support 50% of the consumer spending, right? Okay. So a lot of the how our economy works is about consumer spending and consumer confidence, right? So even the folks that are making money, right, they want to have a certain lifestyle now and fund their retirement as well. And it's going to pinch their pockets too. Because, hey, Kevin, let me tell you something. when my parents, when we had like an economic turmoil or job loss, we had to talk. Remember what was that? Jerry Maguire. He said, "Did you have the talk?" Right?
Yeah.
Yeah. And we had to talk, and that meant, hey, my dad is a master barbecuer, right? Mm-hmm. Hey, brisket, all that type of stuff. That costs money. Brisket costs money.
100%. Yeah.
So we got to talk like this, Kevin. They were like, well, hamburger helper finna be, we finna eat that for it. So even high income folks, they may not be eating hamburger helper, but they're not going out for steak. Instead of 4 or 5 trips, they're gonna take 2, right? So all of that is gonna swim around into what we're gonna talk about next. Is as far as what's going on in the market as far as forecasting is concerned. What are you hearing from your clients, by the way, as far as, these folks saying, are they going to be making adjustments, decisions on cash outlays? What's the deal?
No, so my clients are pretty happy where they are. I mean, like I said, we've done a very good job of consistently educating our clients around market volatility, ups and downs, the swings, and the plans you put in place when people are putting money out of now, of course, the sequence of returns risk. And that's one thing we all have to understand. Like, there's been 10 years, and maybe a disruption or two here and there outside of COVID in 2022. But it's been 10 years of the market, or 15 years ago, the market is going straight up since the GFC, right? Since the great financial crisis. So no one's really felt bad or like, oh man, people's portfolios have gone up, up and up. And what's even funnier, people are seeing this downturn like, oh my God, the sky's falling. Well, if you look at the last 5 years, the market's up 120 something percent, right? So it's all relative, right?
Well, because listen, to your point, I share with people all the time. It's like, look, if you put in $100 right into the pot, somebody flipped over a hat, right, and then you got 500, and then you had to give back another 100. Would you take that deal?
100%. Yeah, absolutely.
I'm gonna take that deal all day because I'm still +3 in this joint, right?
Exactly. But people don't feel that way, right? People don't feel that. Yeah.
No, and it's not funny because you have people that are in different life stages, in life cycles of their lives, and even if you have $1 million and you had a crash of 20%, you losing 200 G's. Particularly when you're either about to go into retirement or right in retirement, your first 2 years sequence of return. Hey, 200 is 200.
And that's why I'm saying, because people always talk, and people can laugh at me all they want to. I don't give a damn, right? I'm saying, what other asset? Because what are all the analysts saying? Expect low single digit returns moving forward until we get all this figured out. Okay, then guess where I'm going to put some money? I'm going to have like a 3 to 5 to 7% sleever getting 4%, whether it be in treasuries, shorter dated treasuries. But they're going to say, oh, the reinvestment risk, Kevin, you don't want to. Hey, show me another asset where I can get 4.5%, whether it be the front of the treasury curve or a money market right now. And again, I know those are tied to, Fed funds and all the other stuff. But at the end of the day, I'm getting 4% risk-free, quote unquote. I'm okay with that. Just trying. Why would I go take an additional 1.5 beta on the market on some stock or some index when I don't have to? I can get the same 4% because if I'm expecting single digit returns, I can keep this cash here and be very, very safe. I feel really comfortable about that.
Yeah, and there's a couple of things before we pivot, which is, what are people doing with their money? And sure, first of all, putting it in a mattress, that ain't helping. That ain't it, right? That ain't it. And also too, a full stop sellout of the market is not cool either. That has to be look at your financial situation, all this, and see if that's right for you or not. However, the 10 best days of the market, whether you go decade by decade, rolling 10 or intra year, doesn't matter. If you have those 10 worst days, which we had like 4 or 5 of them back to back last week, right? Then the 10 best days happen after that, and you have to experience those best days in order to have your portfolio fully recover. So you have to stay in a little bit, a little bit or a lot of it, depending on your situation. So 2 things: full sell stop and putting your stuff in the mattress ain't good. Now, a couple of other things we could do is rebalance the portfolio a little bit, right? Take some losses and offset your gains that you have. Another thing that we could do is opportunity. So talk about this. Hey, look, you talk about pain. That said, no pain, no gain sometimes. And people talk about generational wealth opportunities and generational effects and all this type of stuff. Look, you can buy a lot of stuff on sale right now, right?
Mm-hmm.
What are your thoughts about that? About opportunities to buy?
Yeah, like I said, we rebalance. We're rebalancing right now. There's opportunities everywhere, but again, we have to figure out. Like we're going to go to the next session talking about earnings. We got to figure out what these people are saying. Like I've been on a lot of earnings calls, and I'm listening to how the executives talk. Now, I know a lot of financial advisors may not be in tune with all that stuff. That's it, Kevin. You're doing too much. Well, I enjoy that. I want to know what's going on with the economy. I want to know what's going on with different directions. And plus, I own some stocks in some of my portfolio, so I want to know what's going on. But at the end of the day, like if a person like Jamie Dimon is saying, we're going to pull guidance, even though I know he didn't say that, but a lot of these CEOs are saying we're going to pull guidance. That is not something that's going to bring in positive sentiment for a lot of people, because if you're pulling guidance, then what are analysts going to do? They're going to say, okay, well, we can't necessarily value these companies. So what are we going to do? So, yeah, man, I think it's very important just to stay invested, stay in your own portfolio allocation, talk to your financial advisor. And by the way, don't forget that let's just say I had $100 and I'm down 10%. Well, if the market goes up 10% the next day, you're still not broke. You're still not even.
Right.
You know what I mean? Let's just be clear on that. So yeah, but yeah, you still want to stay invested because you don't want to just sell. It's about buying low and selling high. And again, I know people say that all the time, which really doesn't exist in my opinion, but it's buying low and selling when you feel comfortable, when you need to take some assets out. That's just my opinion.
Yeah. And it is okay to raise cash,
Yes.
So nobody's saying,
especially if you're getting 4%. I'm just saying, like, if I'm expecting low single digit returns, I can get 4% over here. I know it's going to change, but I can monitor that because I can get on the front end of the yield curve. I can get a 3-year or 2-year treasury, and I can be okay. Anyways, I'm sorry.
No. But real talk right there. It's okay to have cash and inject some liquidity into your plan. So it's all, like you said, it's all about working with your advisor, working about your certain situation, smoothing out uncertainty with a little bit of cash backstop. But also, too, if you got some dry powder, right? If you got some of that Johnson & Johnson around there, then right, or some of that talcum powder, right? Then you might have some opportunity to go ahead and buy some stuff off the street, right?
100%.
All right, cool beans. All right, well, let's go ahead and pivot to the earnings season, right? So now that we had the shake up, right?
Yes,
we had the shake up, and folks a recession wasn't even on the table. It wasn't even on the table.
Okay,
the market and the economy was doing fairly, no matter what your view
was doing phenomenal.
Yeah, the facts are the facts, right? Yeah. And so we were finally seeing we got lower inflation month after month. Consumer sentiment was okay. Companies were forecasting growth, all right, in their numbers, and also putting capital to work, right? All of this, even with the elevated Fed rates and the cost of capital just a little bit higher, it's still lower than what it was a couple of years ago, right? But now what you have is like they're like, we can stomach this because we know what we're going to pay as far as businesses are concerned. So the economy on the whole, the jobs unemployment rate was low or manageable,
4.4%,
right? Which is so all of this, and then now we have firms like Delta, right? These are travel. People are traveling and all that type of stuff. And people are like, oh, well, maybe it's not 5 trips. Maybe it's 3 trips. Maybe it's not 3 trips. It's 1 trip. So Delta just pulled back on their forecast a little bit, and a couple other companies. So what are we talking about here? Earnings season, I think 40% of the companies are going to be reporting earnings over the next 30 days. What's your thoughts about that?
Well, I'm in DFW, as you know, and Southwest Airlines is a big company here in the Dallas area, and they're laying people off, right? So it's a big deal. I mean, they haven't had layoffs in a long time, and a lot of it's dealing with the Elliott Management Company, the private equity firms wanting to push the numbers and ROI. But again, earnings season, to be honest with you, I think this earnings season is the most irrelevant earnings season because a lot of companies already said they're not going to give guidance. If you don't get guidance on what they're going to do, and plus a lot of the inflation numbers, a lot of the unemployment numbers, all that stuff is a lagging indicator. Like for example, the government employment, those numbers aren't going to come out till September, October, because they're all deferred. Most of them are deferred. A lot of them are deferred. So a lot of those people that have been laid off are going to come in September, October. So you're not going to see a lot of downdraft in a lot of different areas. Private sector hiring, I know they came out 158,000. I'm like, where are these numbers coming from, right? A lot of it's lagging, man. So I think the next 2 to 3 months is going to be tough. I think we may be in for a rude awakening from a recessionary standpoint. But from an earnings season, like Jamie Dimon just came out and said, their numbers were good because, again, there was a lagging indicator. But he said moving forward, it's murky because of the issue.
Well, here's the thing, though. Yes, reporting earnings. It's backward looking and all that. I get that, right? But it's not too backward looking. I mean, because we're talking about previous quarter, right? Mm-hmm. All this and previous 2 quarters. So it's pretty near term a little bit. Mm-hmm. But when you have companies simply not giving any guidance, now everybody was gung ho, giving guidance, over the last 10 years and the last year and a half. Shit, every damn forecast, company was like, oh yeah, guidance growth is going to be, 4 point, and they said it with their whole chest, Kevin.
Yeah.
Yes. Growth going to be this, growth going to be that.
Yeah.
Right. And so ain't nobody had no problem issuing guidance before.
Yeah.
So the sheer fact that nobody's going to give guidance, that in of itself is somewhat of it's a warning or just being cautious. It's so cautious, right?
Well, you don't know what your inputs are. I don't know what my input cost is going to be day to day. Man comes out and says, "Hey, it's 10%. Hey, it's 20%. Hey, it's 30%. Hey, I was just kidding." So am I gonna just buy up a bunch of stuff to get a bunch of inventory before his next before he wakes up in a bad mood, or is he going to lie to me and say, "Hey, I bought all this inventory. Now I got to figure out how to use it because now I got too much inventory." So people are either going to delay their orders or they're going to just keep going, doing what they're doing. To run a business this way, especially a manufacturing business or a business that needs inputs from different countries, I don't know how you do it, man. And I think it's something that, again, back to our first question, I think it's something that I'm not sure. He's supposed to be a businessman. I'm not sure how he's seeing this as a good business.
Oh, you're not talking about the art of the deal, are you?
6 times. 6 times. No, I'm just kidding. No, I just don't understand how you can run a business without knowing what your costs are going to be. And you know where everybody starts? Just like Elon started with the government. Okay, well, we know this cost. We know it's going to be employees, so we can get rid of those, right? But everything else, it's variable. So it's just insane to me.
Yeah, and I think that as far as uncertainty, it's a smoothing effect that people have, because we always want to bring it back to how people are navigating, and there's just one thing to have fear and uncertainty and worry and all that, but I don't like anxiety stacking. Right. Yeah. Just, by promulgating fear and stacking. Yes, absolutely uncertainty right now. And then you have to look at your plan and say, how do we make these, these ebbs and flows and maybe these adjustments, for perhaps the rest of the year? Because you're talking about 90 days of no. First of all, there ain't gonna be no tariff talk. Yeah, come on, because it is the art of the deal now. It's the art of right? So it's not gonna be no tariff talk. But for 90 days, that's 3 months. That's a whole quarter. So what are we in? What is this? April about to be May. So May, June, July.
Yeah.
So now we got the previous 2 quarters. So now we're talking pretty much for the rest of the year about uncertainty. Here's another thing. I know people poo-poo on economists and all this other stuff, and you can't predict the recession and all that. That said, when recession is forced upon you, all right, this is one of the rare times when leading investment strategy houses, all right, and economists have a high agreement level on the probability of a recession. It's one of the rare times, and I forgot what the percentage is, but now you have like 60, 70% of both of those folks saying there's a recession coming. And typically they don't agree that much.
No, they don't agree that much at all. You and I both know that because their job is to not agree, right? Their job is to be different than the other, and that's how they make their money. But at the end of the day, I do believe there's something out there, but at least we know that at least we can see it versus, a COVID pandemic that just jumped on us. At least we're seeing this. And when this happens, and by the way, I don't know if they've read books. I mean, because I read a lot, right? I mean, would it be McKinley? What happened to McKinley? I'm not saying I don't want to wish anything happened, but what happened to McKinley and lost 85 seats and all the other stuff. Then you have, of course, Hoover, right? And then Smoot-Hawley and all that stuff. I mean, it's in the history books. But what they're going to say is this: Kevin, Yes, it's in the history books, but our economy is different. And you know what? They're absolutely right with that. The economy is different. So we have to kind of say, let's wait and see. But again, history is the barometer. Was it George Santayana said, if you don't know your history, you're doomed to repeat it. So with that being said, I'm just kind of waiting and seeing at this point.
And then you have, also too, I think it was one senator said, you can have your own opinions, but you can't have your own facts.
Well, not these days. You can have anything matters. You got facts, opinions, everything goes, man. It's all good.
Yeah, that and chalk that up to, we're just going to have to disagree. No, I'm not disagreeing on whether to stop at a stoplight or not. There ain't no interpretation of that.
Oh, I've heard that before. Somebody said a stoplight is not a law. It's basically I guess they said it was like an idea. So, I mean, it's your decision to stop or not. I mean, what are they going to do? They'll give you a ticket. Okay. But you don't have to stop. It's up to you. I'm like, okay, man, whatever.
Yeah. I would say this too about, earnings season and people not getting, companies not giving guidance. You got the cost of I think the producer price index is creeping up as well. All of this, right? Layoffs starting to happen, all that, right? And we did say there's opportunity. That said, every time there's a shock to the system, whether it be unfortunate be war, COVID, greed, that's what the financial crisis was. I mean, just bottom line, right? That they may feel different in the moment.
Yeah.
But political risk, geopolitical risk, economic cycles, shocks, drawdowns, pullbacks, corrections. Now that's also historical. It also historical. And then when, like you said, when with the financial crisis and even COVID, you have a 10-year, 15-year recovery periods from the financial crisis, and the COVID shock, and that lasted during COVID, but right after that, market came back, right? Because things started pricing themselves back in. Well, so my point is that this may seem different because of who or what's been happening, but our decision making, as far as our investment plan, we can do something about that.
100%. You can do something about it, and this is basically just stay the course, right? And you said political, right? McKinley lost 85 seats during this situation when he had the same very situation where talk about globalization and tariffs and all of this. Hoover, they lost 65 years of control in the House and the Senate. The Republicans did. So all I'm saying is, hey, be careful what you wish for. GFC happened. What happened? Obama. You get what I'm saying? I mean, we got Obama, and then now you have Biden because of the pandemic. All I'm saying is, man, everybody's got to be careful what they wish for. And the Republicans right now, this is not a political channel, by the way, but the Republicans right now have about 12 months to get this right. They got 12 months to get this right, or they're going to lose the House and the Senate.
I think Jim Carville said one time during the Clinton administration, he was like, it's the economy, stupid.
Exactly.
Hey, man, look, and companies are the same thing with the companies, right? The companies, they're going, when you talk about, the earnings season and what they're saying on these calls and what they're putting out there, and Delta's already made
what they're not saying on these calls
and what they're not saying, right? So, people got to, the companies, small businesses, right? Or like President Bush. Yeah, I actually love not HW, but he was actually a good president. But W, he put he used to put extra S's on things, right? So when he said small business, it was small businesses, right? And terror. Terror. I'm like, how many R's are in that moment? Oh man. So, but small businesses, right? It's like people, the companies are saying, either large or small, are saying we're not going to make a whole bunch of large investments into our companies right now because of the uncertainty. And so is the consumers. They're like, okay, maybe I need to pull back on these purchases a little bit because we need to, where my daddy used to say, put some money where it ain't.
Yeah. 100%. Yeah. This is impacting everybody because and a lot of this, quite frankly, is self-fulfilling. Like I said before in the very first part, the reason why it's not going to work is because people don't believe it. And if we say something long enough, it's like the candy man. You say it 3 times, he appears. Well, at the end of the day, if we keep saying recession, it's going to happen, right? Yeah. So I'm not saying it won't happen because of of what the administration is doing, but I'm also saying that, hey, if we say something long enough, it's economy slowing down, we're going into a recession, it's likely to happen.
Right. Before we pivot, because I want to talk about people's relationship with their higher power, how they see fit, and a really I guess a objective approach to learn folks about their identities, about their cultures, about their value systems, right? And how that shows up in people's money. So we'll talk about that next segment. Right. I want to end with this, which is, right now, if people don't have an advisor or people that do have an advisor, here's the opinions that I'm hearing. During these times of tumultuous times, uncertainty and all that, when you talk about comprehensive wealth management or financial planning, you're talking about risk management, all your property casualty life and all that, right? Outliving your money. You're talking about investments, talking about tax, retirement, lifestyle management, cash flow management, all of these different areas of financial planning. Now, for people that have an advisor, they're like, man, we've had a plan for this. And then we get to go revisit with our advisor and say, what's going on? And then the people that don't, they're like, man, I need to look for me. It's like, well, when Harry met Sally, they was like, hey, look, I have what she having over there. Right.
Exactly.
So what do you think about that? About, people voicing, saying, I advocate for my advisor during these tumultuous times. And then other people saying, you know what, maybe I need to be working with somebody.
Well, the first part is advocation. Like my clients and I think we have a great relationship. I think that every relationship should be far beyond just the the numbers. Like I have a very personal relationship with a lot of my clients, and we do a lot of different things in regards to more just having more than one thing on their balance sheet, like the comprehensive financial planning, the investment management, the wills and trust, the tax planning, yada yada yada, on down the line. And that's how you keep a client for a longer period of time versus a client that's going to be, hey, can you look at this portfolio for me? And you do that. And next thing you know, they're going to shop you around to someone else. So 100% on that. But what you said was kind of put a wrinkle in my brain, because you said that people don't search for something until they feel like they need it. And that's human nature, right? Like, oh my God, it's about to flood out here. I need some flood insurance, right? So it's like, so it's the same thing, man. It's just human nature. Like I bought some flood insurance because I saw this thing over next to my house when it was raining. Well, I said, hey man, that don't look too good. So I just said, you know what? I'm gonna get some flood insurance. So yeah, I bought it way before the time could ever flood around here. But again, it's about being properly protected just in case something happens. So like to your point, getting a financial advisor for these situations, not when they happen, but before they occur.
Yep, no doubt. All right, yeah, let's pivot to and before, man, look, man. Before you, we were in the green room, right? We were in the green room, and my boy Kevin, he was like, "Hey, yo, P." He was like, "Man, look, man, are we really gonna talk about this?" And I was like, "Hey." Right, but it's very necessary because we're our clients. We have to we learn about folks' value systems, right? What their experiences are with money, what their identity is, what their purpose, what brings meaning to their life. And I'm a big financial psychology person, so this is and financial therapy. All this is important part of the money process. Learning particularly values aligned financial planning. And I like to share with folks and tell folks, listen, not tell, but share with folks. Hey, listen, it's faith as you define it, man, Kevin. And the reason why this topic is timely is because the three Abrahamic religions have big days over the past 45 days, right? We had Ramadan for the Islamic faith. Then today is Passover, and then we have Easter next week. So, faith, it's a big part of folks' lives. And then, hey, if you don't want to believe, that's cool too. And then while we're talking economy and government and everything like that, one of the beautiful things about the country is the separation of church and state. Look, believe how you want to believe, yes or no, or whatever your relationship is. But, affirming people about how they believe and how they want to believe and how they put those values into their financial plan is very important.
Yeah, man. I don't know. Again, like I said, it's two things I don't talk about: religion and politics. I know we've been talking about politics just a little bit, but politics is more policy for me. So I kind of I skate that a little bit, right? But yeah, again, like I have a lot of different clients with different religious backgrounds, so I try to be respectful of all that, and I try not to talk about it because I'm not I'm ignorant of a lot of that stuff. Like I don't know what's going on with certain religions, so I'm just kind of like I don't want to step on anyone's toes. So I kind of try to just speak from just what I know, which is just the numbers and their personal situation. Now, when they want to bring me into the fold and teach me some things about that, then absolutely I listen and I put that into their plans. Right. Because I can always learn. I'm an avid learner, man. Like if they say, hey, Kevin, check this out, I'll read it and I'll put, we're a faith-based. We don't want this in our, hey, like you said, I don't want alcohol, tobacco, or sex or anything in my investment. Perfect. Let's screen all that out and let's build a portfolio around that. Now, again, it gets difficult because now you may only have one company, but at the end of the day, I mean, yeah, like I have some clients that don't want certain things and we have to manage accordingly.
Yeah. And see, and that's what I'm talking about. See, I told you, Kevin, you thought I was going to get in here and tell people to, believe me with this or that. I said, no. No. And you don't have to tap dance around it because this is real talk, because, folks they do have their relationships with, their higher power, their faith, the way they define it. Right. Mm-hmm. And if we're going to talk about and be real about values aligned financial planning, meaning, and there's a lot of life domains. It's just not religiosity. It's, hey, I believe in funding only 50% of my kids' college, not 100%, because I want them to have skin in the game. Right? Yeah. See, that's a value, and we have to learn that, right? Adult children. I had an episode, Kevin, about 6 months ago or something like that. It's like, is Gen X ruining their finances for their adult children? And I asked my mom and pop. I said, hey, yo, mom and pop. I said, because they were the guests on the show. I said, would you ruin your finances, for, me and my sister? And they were like, oh, hell no, we ain't doing that.
Exactly.
Right. But so that's a value system as well. So, and I'm coming from it from a celebratory point of view too, for folks that do have relationships with God or their higher power. Right. And you have a month of people having like spirit, right? Believing in something and they're celebrating it, right? It's important to know, what their relationship is, so we can work in their mind. For example, you're talking about indirectly halal investing, for the Islamic community, right? Then for the Muslim community, excuse me. And then you're also talking about for, hey, some people believe on Sunday you don't do jack, right? And on some religious holidays that for the month, for the couple of weeks. So now we're talking about sabbaticals. Yeah. Right. How are you funding that? Right. Gifts to family members. All right. It's baked in cultures, Kevin, to where, hey, look, you finna come off that bread. Yeah. Right. And invest it. And that's a conversation amongst spouses. So all of this is you talk about we're talking about religious giving. You got zakat in the Muslim faith. You got that 10% in the Christian faith, right? So they're in the Bible. So how are people using their donor advisor funds to fund their religious beliefs? That all that goes down to cash flow and allocations and stuff. This is what I'm talking about. Affirming because it's religious season, right? Holiday season. It's about affirming what people's pathway is and how that ends up into their money. That's what I'm talking about.
Yeah. I find it hard for myself to be objective in some degrees because, like, for example, when we talk about people funding their kids' college, right? Yeah. Some people are like, I'm going to do this no matter what. And you could tell them, well, if you keep doing this, it's not good for you. Right. But they sit there and say, I don't care. I want to do this. So subjectively, I'm like, man, come on. Don't do that. Don't do that. And because I would never do that. I'm like, no, man, I live by the airplane analogy. I got to put my mask on because I'm flying the jet. Now, if this plane goes down, we all go down. So I got to make sure that my mask is on so I can land the plane and everybody can survive. But some people are like, no, I want to take this mask and put it on my child, and I'm going to try to fly this plane, and hopefully we'll get there. And that's why I say objectively, I can't look at it objectively because subjectively, I just don't believe in it. I just don't. And it's not religion, but I'm saying in general, like I don't believe in what they're saying because it, like when you see in the facts that, man, this is hurting you, and people are not listening. It's like I'm going to do what you asked me to do. My job is just to show you what it does. I don't necessarily believe in what you're doing, but again, I will help you get to the best version of yourself moving forward. And by the way, I'll make a disclaimer in our financial plan saying that hey, I did not advise for this.
but here's the thing. A conversation before we pivot, which is it is injecting some of that objectivity, right, and having those tough conversations. Now, just like you said, for as funding adult children or being spendthrifts or whatever it may be, right? Some people have or extra frugal. Right, and we'll talk about that on another show. But being extra, that makes some people happy, and other people no, right? But it's a belief system, right?
Yeah.
So if they're working with an advisor such as us, it is essential. And not only do we learn, their beliefs, values, right, attitudes toward money, experiences toward money, and then we suggest. That's what they're purchasing from us, right? Is some objectivity, whether it be a buying purchase or cash flow management. And I've had these conversations before with strong, whether it be Jewish faith or the Christian faith or the Muslim faith, whatever it may be. It's like, and I'm not joking when I say this too. I said, look, God put doctors down here for a reason, right? Yeah. They put financial advisors down here for a reason, or coaches, mentors, right? Guidance systems. And I've had this conversation before. I was like, if you have some money uncertainty, or you want that stronger clarity and confidence with your money, all right, and you want that consistently, well, how about and I've suggested it, and it's tough. It's like placing a slight pause, on your contributions to your particular faith, to your children or whatnot, and then that compounds, and you can give it all back to your faith once you get steady and all that, right? Still a good conversation to have.
100%. 100%.
Yeah. So shouts out to all the Abrahamic faiths the last 45 days. And, if you faith as you define it. And, hey, shout out to you atheists, too. Hey, we objective right here. We neutral around this, John. That's what makes it beautiful. It's like have your relationship the way you want a relationship, and then place those values into your money. So
that's what's funny about everything. People say, I don't believe in anything. I said, well, you believe that you don't believe. So there you go. You believe in something.
Which is cool with that.
Absolutely.
And if that makes it into your money, cool. But and have some objectivity.
100%.
But lean on something if you can.
100%.
All right. So then we're gonna close out the last round with sports betting and how it's influencing the gamification of investing. And this is a topic because what happened? Robinhood just bought Trade PMR, which they in the money management business. So now you have conflation of and we were just talking about this. And at the top of the thing when you're talking about investing that is just that follows a policy, right? Your investment policies. It follows some facts, some guideposts, right? And then you bring this gamification stuff. People think this stuff is betting.
Yeah. So,
what's your thoughts about sports betting influence and behavior? Because behavioral finance is already jacked up as it is, and then you bring the sports mindset into there.
Well, my idea about sports betting goes to Pete Rose and Tim Donaghy. Remember him, Tim Donaghy, the referee. Oh, yeah. I mean, I was like, I think, and this, I think us as Americans have to stop lying to ourselves.
Yeah.
Right. It's interesting how like the NFL played this moral card for decades. Betting shouldn't be allowed. And then next thing you know, we have bet.com and all this other stuff on our arenas and all this other stuff, right? Capitalism's just basically monetized what they deemed to be immoral. They were staunch, no, we just should never be in the game, and all of a sudden it's everywhere. So we claim to be this nation of like holier than thou, and we want to be a Christian nation, and I get it, but yet we capitalize on human weakness. I think gambling to me is the most addictive form, whether it be nicotine, sex, whatever, drugs. I think gambling by far is the most addictive. That's why I don't do it. That's exactly why I don't do it. I'm not for or against it. I'm just pointing out it's the hypocrisy of our nation. And so going back to your question, as long as it's able to make money, just like what we're trying to do right now, like we're trying to reverse what we've put in place with our manufacturing processes overseas, with all this other stuff that we're doing. We got to reverse it now because we created the system. Well, if you keep selling yourself for the almighty dollar, nothing good's going to come out of it. And that's just my point about this, man. I don't understand. You can't say on one side of the fence, it's this bad, this is going to cause so many harms. And the next thing you're going to say, oh, we're going to have these people put their names on our stadiums. It just makes no sense to me, man.
Yeah, and how does it influence like investor behavior? You know, because you got listen, a little bit of crypto if you want to have it in your portfolio, all that in your satellite portfolio. Okay, cool. That said, you know, with the massive run-ups in certain stocks, like, all right, well, let's start cryptocurrency, which is, you know, DeFi, right? And then you have the whole NVIDIA thing. They treated that like Hollywood, right? It's like whole Reddits and
they made a movie about GameStop, so there you go.
GameStop, all this, right? And so you have a whole you got all the new up and comers, the Gen Zers, and all this with all this gamification that experience this massive outlier run-ups. By the way, there's not too many times we're back to back 20% years or 300% returns in some of these. You know, and some of these coins and all this other stuff. That none of that stuff happens on the regular, right? So when COVID was happening, right, there's a lot of people that were just playing the stock market, not only just Gen Zers, but you know, just everybody across the board because there wasn't nothing else to do. But the fact was they were getting all this COVID relief money and they were putting it into the stock market. So basically, the government was subsidizing the run up in stocks and all the other stuff. So yeah, I'm not against what happened, but I am against the gamification of not only the stock market, but the gamification of using these betting systems. Because what's happening is this: people get addicted, and next thing you know, they're going online. LeBron, you're a scrub. Kevin, why didn't you hit that 2-0 fastball over here? You know, that's they're on my thread. Like what just happened? You know, so yeah, I don't think it's fair for the athletes. But again, I mean, if they're gonna let it come out, like the NIL in college and all the other stuff. By all means, pay the athletes. I mean, you guys were subsidizing other organizations, subsidizing yourselves. Now let the person make their money on their name, and image, and likeness. And if betting companies want to get involved in that, by all means, but don't allow for the organizations that came out and said no to capitalize on this. If they want to capitalize on their own good and without the help of MLB, NFL, and all the other stuff. And again, I know the money's big. Right.
But don't just it's hypocrisy, man. That's what I stand for, right there. It's just hypocrisy.
Shoot, say it with your whole chest, man. Particularly from an ex-baseball player too, you know.
Yeah. I've never been on anything, by the way, just FYI.
Yeah, right. Hey, look, I had a couple of Super Bowls going. But the thing about it is I think, you know, particularly with companies like Robinhood, Buy and Trade, PMR, I don't know how that's going to shake out or anything like that. But, with the platforms that have massive crypto exposure and all that, there's a lot of volatility in that sector. And it's just like when you get down to behavioral finance, right, and all the behaviors that hold most of it's hostage, you know, we have to talk that out and all that. So we're all the same in, you know, being adverse to loss or putting money, that's the loss aversion, feeling a loss 2 times more than a probability for a gain. You got mental accounting by bucket putting monies in buckets and throwing away money because it's in this bucket, right? So you have all these behavioral finances, putting your hand in the sand, and got avoidance, right? All of this, and then you bring on the mentality of this stock market, this is play, and I'm like, nah, you know. And then you got the comparison, right? Is like who's experiencing these exorbitant returns, whatever they buy. Man, who the hell knew? Nobody wouldn't talk about no damn NVIDIA, you know. and it's all good. Yeah, you'll buy some of that, if it's dipping and all this other stuff and all that type of stuff. But to say that, I won, survivor's bias, when you're talking about, I won because I put all my money into Bitcoin, at the right time, right? And then also Nvidia at the right time. And you hear all these success stories. They're not that many, Kevin. There's not.
No, and it's the same thing with everything else. Like in life, whether it be the people on social media that are making all the money, people on YouTube making all the money, the people that are basically the biggest hedge funds out there making all the money. It's just like a small group of individuals. But they don't talk about the tens of thousands that have gone bankrupt or just getting by. So it's the same thing, and even in sports. I mean, the majority of the people making all the money are like the 3 to 5%. Everybody else is just trying to get by. And I can attest to that in Major League Baseball. I mean, it's just 95% of us are just up and down trying to get by, trying to get to that first contract. But those 5% or 10% of players out there making all the money, and that's okay. I'm happy with it. I'm happy for them. But again, it's just it needs to be addressed, but it never will be addressed because nobody wants to talk about that. Nobody wants to talk about all the bad things that are happening unless you're on the 6 o'clock news. You know what I mean? But everybody's talking about the good stuff. So it is what it is. The social media is the best version of yourself, my friend. I've always said that.
I support that 100% because I always say there's real life, that's REEL, and then there's real life.
Oh, I like that. You gotta use that, man. You gotta use that. I like that.
Oh man, because people be fronting on the socials and stuff like that. It's like every day is peachy, man. I'm like, man, look, hey, sometimes I got. Now I'm happy that I'm very fortunate I woke up that morning, no question. And then I happen to be a believer, so I say a couple of words to my higher power. And some of my prayers are, hey, just give me the strength because today gonna be rough, and then there's something going on my social reel. I'm like this, and I'm like, you know what? That was scheduled, y'all.
Yeah.
That was scheduled like a week ago because today, I'll put up on it. What they got them little comments above you're done now, and I'm like, hey, today ain't the day, right?
And that's one thing I pride myself on. Like I say, I want to put stuff out there. I'm constantly telling you, hey man, boom, this is the reality. This is what I'm doing. This is what's going on. I don't like putting out a fictional character of myself. I like to be straight, 100% up front, and that's what I try to do. I mean, I try to be genuine as much as I possibly can. I think that genuine breeds good relationships, and again, that's just my stance, man. That's what I stand for.
No doubt. Man, Kevin, man, we're going to be doing a lot more of these.
This is fun, man. I appreciate the opportunity. Thank you for having me on the show, man. This is awesome.
Oh, man, look, I usually carry these by myself, but you and I have been talking for a while, so I think at minimum we're going to hold one of these together, and because we're doing your platform, my platform, everybody can find us and all that because we brought some energy to some good stuff. We talk real talk. We brought some stats. Got some facts. Got some conjecture. Got some entertainment. Right. Right. And, so I'm looking forward to more of these, man. And before we get out of here, man, give me something on top of your head. Usually you got a fro. All right.
I can take it down real quick. It pop out.
Yeah. You be on fire, man. I'm like, oh shit, Kevin got the fro out today. You got the fro out today. So, man, what's one thing on your mind you want to leave the people with right now?
Man, like I said, I've always liked to just genuine honesty, integrity, and don't feel like you're lagging behind because we're in constant competition with one another, which is something that we shouldn't be. Don't worry about what anybody else is doing. Just do what you're going to do and let the chips lie where they may. Because again, all this stuff, they talk about coaching and all this other stuff. And again, I'm all for coaching, but there's no real true bullets. There's no silver bullet. Nobody is right. No one has all the answers. Do you and be happy with what you do. I don't care if you have 1 follower on your Instagram or 10 followers on your YouTube. Hey, be happy with those 10 followers and do your damnedest to make them happy.
Hell yeah, man. I'm pumped up too. For sure. My pops always said, man, keep your blinders on. Hey, worry about the people that matter, right? And your circle, And like my man, Mike Jack said, man, look at the man in the mirror, right? And, hey, because the mirror could be a powerful audit or an expensive tax, one of the two, right? So you better get in there and tell yourself the truth, right? So
Yeah.
so you can get to where you need to be getting. All right,
Yes,
my
sir.
brother, man. I'll put all your socials and everything like that and where it need to be. Man, love you, love everybody that's been listening. Keep on tuning in to these Jones because this energy is hot, and we're gonna be dropping gems on you all the time.
Appreciate you,
all right,
boss.
though. All right. All right.
Thanks, man.
Peace.